today we are going to discuss about costing third methods as methods and techniques of costing, where we discussed as normally what are the methods and techniques, but not in depth. Now, we are going to discuss what is costing and cost accounting, that already done. Once again refreshing that one. A cost can be defined as the monetary value spent to acquire something, where costing is defined a process of ascertaining the cost, and the cost accounting is the process of accounting and recording of cost. So, costs are incurred by both manufacturing and service organizations. So, it is given by Luca Paciello, a famous cost accountant named as father of cost accounting. He is Luca Paciello, where he has given what is costing and cost accountancy. In India, there are the institutes regarding the accounting techniques and the methods given by an Institute of Chartered Accountants of India earlier. Now, it has been named as Institute of Cost Accountants of India, where if you go with the methods of costing, specific order costing is the category of basic costing methods applicable where the work consists of separate jobs, batches or contracts, each of which is authorized by a specific order or contract. Job costing, batch costing and the contract costing are included in this category. Whereas continuous operations costing methods is used where the goods or services being costed are the results of continuous or repetitive operations or processes. Costs for a financial period are collected for the particular operation or process and divided by the number of units produced in that period to give an average cost per unit. So, in the methods we can segregate as specific order costing and continuous operation costing. Under specific order costing methods, first one we can discuss about job costing. What is job costing? It is the method where the costs are collected and accumulated for each job, work order or a project separately. Each job can be separately identified, so it becomes essential to analyze the cost according to each job. A job card is prepared for each job for cost accumulation. You can see the people working under a particular job. As an example, if we take a car for servicing, first they will be giving a job card, that what work has to be done to a particular car and given an estimation time and estimated cost. So, that is to finish a job in a particular time period. So, there the expenditure whatever incurred is totally estimated and given with the customer. So, if the customer is satisfied, he can give the car and he can make a service of the car. Similarly, any job given to any worker has to be finished with the related costs and related time. If you go for the contract costing, we know about the contracts as municipal contracts, given the contracts to the different contractors as to complete a particular work. Similarly, contract costing is used when the job is big and spread over a long period of time. The method of contract costing is used. A separate account is kept for each individual contract. As we know, L&T has taken a contract from the government to finish a metro rail. That project is separately for a long period, it took a number of years to accomplish it. So, to complete that job also it is a long period taken, so that it is treated as a contract. So, there the contract costing is applied to find out the total cost incurred and the amount received. The difference we can say as a profit on the contract. Batch costing. This is an extension of job costing. A batch may represent a number of small orders passed through the factory in batch. Each batch is treated as a unit of cost and separately costed, means separately calculating the cost. So, the cost per unit is determined by dividing the cost of that batch by the number of units produced in that batch. If we will take an example of Reddy's lab, where the number of departments produces number of products as tablets, where the number of medicines produced by single product as like an example as a Dolo 650. That is a particularly a medicine in a particular batch they will produce and they will give a proper time period to utilize it. So, at that places the batch costing is used to find out the total expenditure incurred to that batch. Similarly, a specific order costing method, we can go with the target costing. This is the method before commencement of the job, the cost of work is estimated with the help of experts. This estimated cost is termed as target cost, and the contractor is paid commission at a certain percentage on this cost. As a road cell buildings, where the roads will be laid down by the contractor, where the expenditure is estimated and targeted, that estimated cost whatever given including their profit they will be giving to the government. So, according to that estimated cost only they will be working on it. So, after completing the target they will be getting the amount of contract. These are all come under the specific order costing methods. Whereas, continuous operation costing, process costing is one of the method where continuously the work is done from one process to another process till the finished goods has to be produced. This is suitable for industries where production is continuous, manufacturing is carried on by distinct and well defined processes. Products produced during a particular process are called exactly and identical and also known as average costing and continuous costing method. If we will take an example of the sugar cane taken for crushing, refining and finishing, and ultimately a crystals of sugar will be formed. It is a process from one after the other, where raw material becomes a sugar canes, that is crushed first, that is first process, then it is goes to the next process for refining, and after refining it makes a particular sugar crystals to be sold in the market as a final product. Apart from that, we can take an example for process costing are so many, like edible oil or coconut oil, where the coconuts will be crushed, refined and finished, and ultimately at the end we will be getting a final product which can be poured into the bottle and sold in the market. Under the continuous operations, another method called as single or output costing. This method is used where the production is uniform, consists of only one single product. The cost is ascertained per unit of output, and the units are identical to each other and are the standard ones where the products manufactured. A simple example we can take as a bricks, where the number of units which are identical for all and there is no other way of showing it, as same process will goes on for one single product with one manufacturing unit. There is no other things to be done, only one product with the one form of uniformity, where there is no other way of producing it. So, there the single or output costing method is used to find out the total cost incurred is how much per unit. So, each unit cost we can identify by dividing with the number of units with the total cost. Under the same continuous operations costing, another method is operating costing. Operating costing method is one designed to ascertain the control the cost of the undertakings which do not produce products, but which renders services, also known as service costing. Operating costing is the cost of rendering the services. Example, a transportation department where the products won't be there. The people are the persons who goes from one place to another place through a travels, where their operations is only to take the persons from one place and sending them to the other place. So, transporting not only the persons, transporting the goods from one place to another place, for which the cost how much is incurred to operate it. So, that is called as operating costing method, where designed to control the cost and to undertake to render the service. There the services are rendered for a particular purpose as to operate it. So, that is an operating costing methods. Another continuous process is multiple costing, also known as composite costing, is a type of accounting method used when goods are sold that can contain several other processing or parts, and these parts are costly different. As a cost differently, just as the final product needs a cost associated with it. So, do each of the parts created by other processes. This is called costing. Each component or a part can be and usually is costed using a different practice. Example, we can say as car. Car manufacturing company will not manufacture the tires, tubes or a glass metal. These are all different parts which are manufactured by the different companies, but those parts cost will makes a difference, and at the end a final product is produced as a car, which is an assembling of different parts. So, all those several other processed parts will be assembled, which are costed differently, and at the end the total cost of the product of the car is combined. So, that total multiple costs is combinedly one cost of the product which we are showing as a product of a car. After that, if we will go with the techniques of costing, the different techniques used for the different purposes. But what is a technique? A technique refers to the manner of ascertaining the cost of product, job or activity. These are strategies which can be adopted to ensure that the cost of product is reduced. The following are the techniques adopted by the strategic management accountant, where they will be planning to reduce the cost and how much the cost is incurred. That also can be find out. At the end, they can find out how much can be reduced when they are going to produce in the next time. So, the different types of techniques which are used in the different places are marginal costing, budgetary control, standard costing, activity based costing and responsibility accounting. These are the techniques used for different purposes and different places. If you go with the marginal costing, a marginal cost is nothing but cost of producing an additional unit or output or service. Additional unit, nothing but more number of units which we actually produce. Apart from that, one more unit you are producing it, then how much is the additional cost incurred. So, marginal costing differentiates the fixed and variable costs, because marginal cost is defined as the amount at a given volume of output by the which aggregate costs are changed if the volume of output is increased or decreased by 1 unit. As a marginal cost features, if you go, semi variable costs are included in comparison of cost. only variable costs are considered, fixed costs are written off. Why? Because fixed cost, at any cost it incurs whether you produce it or not. The prices are based on variable and marginal contribution. Basic equation of marginal costing, if we will take, the profit will be getting by subtracting the total cost from the sales, that is profit equals to sales minus total cost, where the total cost includes variable cost and fixed costs. So, if you take an equation as profit equals to sales minus variable cost plus fixed cost, if you open the bracket, it comes to sales minus variable cost minus fixed cost. If you bring fixed cost to the left hand side in the form of an equation, it comes to profit plus fixed cost equals to sales minus variable cost, where sales minus variable cost is nothing but the contribution, that is the actual contribution made by the workers in their work, and that contribution can be said as fixed cost plus profit. Why? Because the equation shows every time profit plus fixed cost is equals to sales minus variable cost. So, the contribution when we are saying is as sales minus variable cost, it can also be said as fixed cost plus profit. So, the contribution equals to fixed cost plus profit. If we bring the fixed cost to left hand side, then it becomes contribution minus fixed cost is equals to profit. That is regarding the marginal cost technique applied to find out whether to produce the product additionally or not, whether to increase the production or not. Another method or another technique we can say a budgetary control. We know budget, that is planning before doing it, that is to be controlled while producing the product is that estimation part whatever will do it. So, the budgetary control, budget is a financial or quantitative statement prepared and approved prior to the defined period of time of the policy to be pursued during that period for the purpose of attaining a given objective. So, the budgetary control, if we say a control technique whereby actual results are compared with budgets, means actual results are compared with estimated one. Whatever we planned, whatever we estimated, is it actually going on or not? If not, how to control that expenditure? A such strategy to control the expenditure of a firm. That is a budgetary control technique applied in every manufacturing process, where it may be a product manufacturing or a service organizations. The features of those are mainly as objectives, activities, the plans, performance evaluation and control actions. Those are the features of budgetary control, where the first they will be estimating according to their object, and those activities are implemented according to the plans. If the plans are going according to the budgeted one, then it is well and good. Otherwise, how to perform the evaluation and how to control that expenditure which is more than the actual or more than the estimated one. So, what may be the advantage of that budgetary control? We can define the goals it easily as what we thought of it, and we can define the responsibilities of the worker on a work, how much has to be worked at a particular place and how much time to be taken to complete the product. And the basis for performance evaluation, we can evaluate it easily as a performance of each individual workers on a particular job, on a particular machine, and we can optimize the use of resources. We planned, and according to the plan only if we use it, then we can use the best use of the resources. And the coordination, obviously it is necessary to work efficiently and effectively. A coordination between the workers is necessary, and the planned action is taken if not. So, those are all the advantages of budgetary control. As a budget, whatever prepared, according to that it has to be implemented in the organization. If not, how to control over it is also to be planned before doing it. That is the technique which every manufacturing company will estimate and will give the plans to the management. Limitations are there, some disadvantages or cons or pros or cons, what we will say as a cons is there in the budgetary control also. What may be the limitations? Estimation may not be accurate because day by day there are so many changes in the cost or the expenditure on a particular product increases because of the inflation. There are so many things are going on where the cost of the product has been increasing rapidly. Rigidity is also another way, as if you rigid on a particular thing only, it is not possible to continue. False sense of security, that is also another limitation of this budgetary control, as we cannot sense falsely and say that that is only the accurate part. Lack of coordination and the time and the cost makes a lot of difference in the budgetary control. Whereas, the standard cost is also another technique applied by the business people, where the service organizations estimate before implementing the activity. The word standard means a norm or a criterion. A standard cost is used to measure the efficiency with the actual cost has been incurred. Means previously how much incurred, based on that we can estimate it. That estimated cost is nothing but a standard cost which is fixed. But the steps in standard costing, if you go, setting of standard costs of different elements of costs, ascertaining actual costs and comparing standard with the actual to determine the difference between the two are known as variance. That is the difference what we are getting with the actual and standards. Then analyzing variances for ascertaining the reasons thereof, why the differences happened, why we got the variance while manufacturing the product, and reporting of these variances and analysis thereof to management for proper appropriation action where necessary. So, standard costing is also another technique under costing methods, where estimation is done, which is a standard one, and it is to be compared with the actual expenditure going on in the process. Another technique is activity based costing. What is this activity based costing? Is that costing in which costs are first traced to activities and then to products. Means not directly to the product which we are manufacturing, related activities whatever are there, those activities cost is estimated first. That is why it is activity based costing. Activities becomes the focal point for cost accumulation, and those factors are which determine the cost of activities are called as cost drivers. They are treated as cost drivers because based on the activity you are estimating the cost. That cost of activities are called as cost drivers. Based on that we can estimate the total expenditure will be how much. As a possible cost drivers, if we will take machine hours, means based on the number of hours we can estimate the total expenditure will be how much. Direct labor hours, where the laborers were working on a particular machine, how much of the number of hours taken to produce a particular product. So, based on that also we can pay the labor. So, that is directly the labor incurred on a machine for producing a product. Number of setups, means to produce a product we need to set the machine. For setting up, how many number of hours it is taking, how many number of setups is taking to produce the different types or different shapes of the products, and the number of products and number of purchase orders, means how many raw material, how many times you are purchasing and how many times you are keeping the orders to purchase it, is also the estimation part. Number of employees are also treated as a cost drivers, because number of employees make the number of products, and number of products will make the number of hours, and based on the number of hours only will pay the amount. So, based on that, the number of employees and number of square feet is also treated as a cost driver. So, the common classification system, if we will take unit level activities, that is activities performed for each unit of production, batch level activities, activity performed for each batch of production, sometimes product level activities, activities performed in support of an entire product line. Like a car is taken as an example. Car is a final product which we are utilizing it, where it is the assembly parts of the different products which are the final products produced by different companies. Facility level activities, activities required to sustain an entire production process. For the total production process, how many facilities required, and for those facilities level different activities are required, different expenditures are incurred. So, these are all the common things which are classified in a particular system called as a cost based, that is activity cost based system. When is ABC most useful? That is activity based costing is useful at what time? Is high amount of overhead costs, that is excess costs are incurred in each department separately, then this ABC is useful. Multiple products we are producing in the same production company, different products we are producing, there also the expenditure we need to calculate based on the activities, based on the products. At that moment also activity based costing is required. Complex products, complex production system, where product cannot be produced at one single system, they need to do as a 2 or 3 processes for one product which we will be utilizing at the end. Significant variation in volume between high and the low volume products. Different products place different demands on resources, where the problems with current cost allocations due to changes in products or processes, there also ABC is required. Better cost information is needed at that places where activity based costing is mostly used. Responsibility accounting is also the another part of it, where responsibility accounting is based on the assumption that every cost incurred must be a responsibility of one person somewhere in the company. That means everyone who is working in the factory or working in the manufacturing concern, that total expenditure incurred for each person is based on their responsibility, that how much cost incurred to them. In that way, if they work, they can know the total expenditure is how much. By this, we can say methods and techniques of costing we have done with.